Thank you. Thank you, I guess. Welcome back, YouTube subscriber. It's nice to see you. Or, or here, no. All right. So, today we're going to do 8-2, which is journalizing and posting closing entries. The entire instructions says continue on the same journal page, journalize and post closing entries, save your work. So we're going to journalize and then post, which means fix the ledgers, closing entries. So we don't need that anymore. I've written this handy dandy cheat sheet for closing, which again we talked about in class. Closing is taking a temporary account or an account which changes every month and closing it to appropriate spots. For example, sales changes every single month. Sales gets closed to income summary. Expenses change every single month. They get closed to income summary. Your income summary, which is basically sales and expenses, gets closed to capital. And then drawing, the amount an owner takes out of their own business, gets closed to capital. So I would write this to yourself as a little side note, and then we'll do some closing entries. All right. So we're working on the general journal, page 4. Yesterday we did our adjusting entries or adjustments. Now we're going to center the word closing entries, which lets you, the accountant, know, or any other accountant looking at your work, that we have finished adjustments and have moved on to closing entries. So, as stated on my handy dandy cheat sheet, the first thing I'm going to close is sales. So, I need to know how much the balance is for sales. I can find that in 2 different spots. The first spot would be your 8-column worksheet in this row, sales 5511, or I could look at the ledger for sales. Sales. Here's your sales ledger 5511. Because the 8-column worksheet pulls all the ledger number accounts, all the ledger account balances. So we'll just use the 8-column worksheet. So sales currently has a credit balance. So to close or reset sales to 0, what do I have to do to it, everybody? Debit it. Good. Okay? So this is happening on July 31st. I'm going to debit sales 5511. And I'm closing sales to income summary. So income summary gets the credit of 5511. So again, the whole idea was I'm taking the sales amount, debiting it, which brings its ledger balance to 0, and then I'm crediting income summary, which will be a temporary placeholder until I'm close it. The next thing I need to close is all of the expenses. All of my expenses have a debit balance. There are this many, 4. If they all have a debit balance, what do I need to do to close them? credit them. Good. And when we do a general journal, what always goes first? The date. Yes, thank you, Benjamin Burns. Then what? What goes first, the debit or the credit? The debit. Good. And if I'm crediting all of the sales, or all the expenses, sorry, that means income summary is going to get the debit. Income summary will get a debit of the sum of all my expenses. So I actually don't know this number yet. Kinda. I'm going to have to figure it out. So now I would list all of the expenses that I need to close, like ad expense, insurance expense, miscellaneous, and supplies. So all of these numbers are going to be credited. So the ad expense was $821. Insurance was $300. Miscellaneous is $347. And supplies is $713. So what is the total amount that I'm going to be debiting? Or how do I find it? Yeah, add all these up. If you look at your income state or your 8-column worksheet, income statement column, remember it's sales and expenses. This number right here is total expenses, $2181. So you could add these up and they would equal $2181, or you can just look at the 8-column worksheet. So $2181 is the total amount that will be posted to income summary. So we did sales to income summary, expenses to income summary. The next thing we have to do is income summary to capital. So our income summary is essentially our net income. So, well, actually, no, let's do it a different way. Let's post these to the ledgers and then see what our income summary ledger is. So when I post, we'll start with the first things first. Sales is a 5511 debit happening on the 31st. So go to your sales ledger. If you remember yesterday, in the item, we started using the word adjustment. What do you think I'm going to call these types of things? Closing. Closings. Closing time. Time for you to get up there. It's from the G4. And if you recall, it was a 5511 debit. So a 5511 debit, 5511 debit, and my account had a 5511 credit, which brings my balance to 0, which means I will put 2 lines in the balance. That means it's closed. If you just had an account with a 0 balance, that means nothing happened, potentially. If you have an account and a ledger that has 2 lines in the balance, that means it's closed. The account number is 410. So back on your general journal, you put your ledger number, 410, which means you posted it correctly. The next thing to post to the ledgers is income summary 5511 credit. Here is income summary on July 31st. This is not a closing entry because we're not closing it. It is from G4, and it got a credit of 5511, which will bring my balance to 5511. My ledger number is 330. The next thing to post is income summary 31st, income summary 2181 debit. So income summary on the 31st from the G4 to 2181 debit. I'm debiting something with a credit balance. So what do I have to do, everybody? I heard it once. Am I adding or am I subtracting? Good. $5511 minus 2181 is 3330, which, if that number looks familiar, that's your net income. That's from the 8-column worksheet. So, income summary had a 330. That's their ledger number. 330. Now we'll post all of these credits to all of the expense accounts. The first one is ad expense and 821 credit. Oop. Ad expense on the 31st. It is a closing from the G4. We credited it on the journal, so we credit it on the ledger. It had an 821 debit. We're doing an 821 credit, which means the account is closed or zeroed out. 510 is my expense ledger, my ad expense ledger. So ad expense is now closed. Insurance expense is a 300 credit. Insurance expense is what we did yesterday. We did an adjustment and we had a 300 debit. Now on the 31st, we're going to do a closing from the G4. It's a $300 credit, which is going to bring the balance to closed. Ledger number is 520. Post my ledger number here, 520. Next one is miscellaneous expense. It's a 347 credit. Miscellaneous expense ledger on the 31st as a closing from the G4, 347 credit. Balance is closed. had a 347. We're closing it. It now has zero balance. Account number is 530. Back on here. 530. And the last expense is supplies expense. It has a 713 credit, or we're going to credit it 713. Here's our ledger from yesterday, supplies expense. On the 31st, we are closing it from the G4. We just said it was a 713 credit. 713 credit, 713 debit equals 0. That account is closed. My account number is 540. Okay. So now we have journalized and posted, sales to income summary, expenses to income summary. Next one is income summary to capital. So now that we know what our income summary balance is, we can close it to capital. Let's find income summary real quick. Okay. Here's my income summary ledger. Yours should look the same. So income summary currently has a 3330 credit balance. So what do I need to do to get rid of it? Debit it. Good. So income summary, we'll get a 3330 debit. So on the 31st, income summary gets a 3330 debit. And the thing that gets the credit is capital. So the owner, which is Darlene something or other, I think. Darlene Wong Capital. So we'll do Darlene Wong Capital gets a 3330 credit. Let's go ahead and post this to the ledgers now. So income summary gets the debit, the 3330 debit. So find income summary. What are we doing to income summary? Closing it. So on this line, you'll write closing because now we are making it go away. So debit 3330. The account is closed. Income summary is account number 330. 330. So income summary is now closed. And now capital gets a 3330 credit. So find capital. Capital is right here. On the 31st, from the G4, it gets a 3330 credit. And remember, capital has a normal credit balance. Capital is the value of your company. So we're going to take 3330 plus 6543. And your new capital amount is 9873. Because remember, this 3330 was your net income. Who gets the net income at the end of the month? The owner. The boss. Rick Ross. The boss. Darlene Wong's capital account number is 310. So you go 310. And the last thing you have to close is drawing to capital. Because remember, drawing is the owner taking money out of the business. So let's find drawing real quick so we know how to close it. Found it. Drawing has a $2,100 debit. So what do I have to do to close it? Credit. So drawing gets the credit, which means capital gets the debit. Because over here it says drawing and capital. So capital. Oh, I should put Darlene Wong. Capital. And the thing being closed is Darlene Wong drawing. And it was, I forgot already, 2,100. So 2,100 in the debit for capital, 2,100 in the credit for drawing. Let's go ahead and post those to our ledgers. Capital gets a $2,100 debit. I know. We're almost done. So we get a $2,100 debit. Well, we're not closing it. This is capital. Drawing's the one that gets closed. Yeah. So you had 98.73. You're taking out 2,100. You're left with 7,773. 310 is my ledger account number. And the last thing you have to do is close drawing by doing a $2,100 credit. Here is drawing. On the 31st, this is a closing entry from the G4. Like we said in the journal, it's a $2,100 credit, a $2,100 credit minus a $2,100 debit is nada. So it is closed. My account number is 320 320. Yikes. So this is your closing entries, sales to income summary, expenses to income summary to capital, and then drawing to capital. And then we posted to all the ledgers. Any account that we closed should have a zero balance. And that is almost the end of the accounting cycle for 1 month for a business. Peace out, YouTube.
Yeah.
Woo!
Yeah.
If you were absent today and you're watching this, enjoy rewatching it like 6 times because it's really complicated. Goodbye.